Tired of watching your money disappear? You're in the right place. Let's save it. Hey savers, welcome to Save It, where we make your money work harder. Please remember this video is for entertainment purposes only, and is not financial advice. Today, we're talking about one of the most talked about changes in the new tax plan, the no tax on tips provision. What does it actually mean, and how can it help you keep more of your hard-earned money? Let's dive in. So, traditionally, your tips, whether cash or credit card, have been treated as taxable income just like your wages. You report them and you pay federal income tax on them. But the new tax plan, specifically for tax years 2025 through 2028, introduces an important change. You can now deduct up to $25,000 of qualified tips from your federal taxable income. This means less of your tip income will be subject to federal income tax, potentially leading to a bigger paycheck or a larger refund. Now let's get into the details. This deduction is primarily for those in occupations that traditionally and customarily receive tips. Think waiters, waitresses, bartenders, hairdressers, nail technicians, and similar service roles. The Treasury Secretary will be providing a specific list of these occupations. Income limits. It's important to note there are income phase-outs. The benefit starts to reduce if your modified adjusted gross income, MAGI, exceeds $150,000 for single filers or $300,000 for those married filing jointly. So it's designed to primarily benefit middle and lower to middle income tipped workers. What counts as a qualified tip? Generally, these are tips paid voluntarily, not subject to negotiation and determined by the payer. This means mandatory service charges, for example, wouldn't qualify. Cash tips include physical cash, credit card tips, and tips received through sharing arrangements. Still report tips. You still must report all your tips to your employer, and your employer will still report them on your W-2. And remember, this deduction applies to federal income tax only. Your tips will still be subject to Social Security and Medicare, FICA taxes, and potentially state or local income taxes depending on where you live. How it works. Instead of your tips being automatically untaxed, this will be an above-the-line deduction on your tax return. This means you can claim it even if you take the standard deduction, which is great for simplifying your taxes. So, what does this mean for your Save It strategy? More take-home pay. For eligible tipped workers, this provision can significantly increase your actual take-home income. That extra money isn't just a bonus, it's a direct opportunity to boost your savings account, pay down high-interest debt, or contribute more to your investments. Financial flexibility. Having more of your tips free from federal income tax gives you greater financial flexibility and control over your earnings. Planning ahead. If you're a tipped worker, start thinking now about how you'll utilize this extra income. Create a budget, set some savings goals, or consider professional financial advice to maximize this benefit. While some analyses suggest the biggest benefits go to higher-earning tipped workers, anyone in the eligible income range who receives tips could see a meaningful impact on their annual tax bill. That's our wrap-up on making your money go further. Please give this video a thumbs up, subscribe to the channel so you don't miss out on more ways to save it, and share the video with a friend who may benefit from it.